Okay, so this is our agenda for today. In a second. There we go. Technology is great. We're going to start by asking you a quick question about the barriers that currently prevent you from running a trivial commutation exercise, and then as far as we can, we will try to cover the obstacles that you identify as key during the webinar. We expect that most people on the webinar will be familiar with trivial commutation, but just in case, we'll spend a little bit of time explaining it. But the bulk of the session will be drawing on our collective experience, and so Xafinity alone has completed over 50 trivial commutation exercises, and we have a number in various stages in progress. To explain how to set up and run an efficient and successful trivial commutation exercise. And just to be clear there, we're measuring success there by the number of members who take the best option for their circumstances, not simply saying that success means a high take-up rate. So, without further ado, here's a quick question for you. What do you currently perceive to be the barriers that are stopping you from implementing a trivial commutation exercise? You can select as many of the options on the right-hand side of your screen as you like. While you're thinking about that, I will just briefly explain what trivial commutation is. Okay, so trivial commutation is, of course, just the process of swapping a small pension for a lump sum. And this option can be given to deferred members above age 55 and to pensioners. Now, there are two limits to note. Firstly, if a pension is worth less than £10,000, then it can be exchanged for a lump sum, and there's no need to check what benefits the member may have in other schemes. And for this reason, it's called the single pot limit. Secondly, though, if a pension is worth more than £10,000 but less than £30,000, then it may be possible to exchange it for a lump sum. But to do so, it's necessary to check what other pension benefits the member has, and if the total value of their pensions is less than £30,000, then any of their pensions could be exchanged for a lump sum, and this is therefore called the total benefits limit. Now, there are some other technical eligibility requirements that need to be checked before a payment can be made, and perhaps the key one is that if a scheme provides Section 148 revaluation to GMPs prior to retirement, then trivial commutation can't be made to a member until that member has passed GMP age. That's 60 for a female and 65 for a man. Now, interestingly, the way that the checks of value are carried out are different for the two limits. For single pot limit, the check is done using the scheme's trivial commutation factors, but for the total benefits limit, the value check is done using specified factors, so 20:1 for a deferred member, for example. But the amount that's paid is still calculated using the scheme's own trivial commutation factors. And so the actual payment can actually be significantly higher than £30,000. In fact, I actually saw one a few weeks ago of just over £50,000. So why do schemes undertake trivial commutation exercises? Well, we typically see 5 key reasons when we're putting together a business case. Firstly, administering a small pension is disproportionately costly, and removing those pensions will either free up capacity within the pensions team, or it would reduce the cost of third-party administration. Secondly, evidence suggests that members prefer a lump sum to a small pension. Indeed, for some schemes, just providing this option to members is seen as justification enough. But for most schemes, it forms an important part of the overall package of reasons. Payments from the scheme will, of course, reduce risk and are likely to improve the funding position for schemes, though the extent of that will, of course, depend on the terms offered to members and how this compares with the actuarial assessment of the liability. And we'll return to this issue a little bit later. And finally, if your scheme is planning any other liability management exercises, so, for example, enhanced transfer value exercises, flexible retirement options, pension increase exchanges, a buy-in, a buyout, then carrying out a trivial commutation exercise first is a great way to improve the efficiency of the subsequent exercises, as again, dealing with small pensions in such exercises is very costly relative to the potential benefit, and in particular, if you're involving an IFA who's paid on a per-member basis. If you are doing that, though, it's important to think about the terms that are offered to members for trivial commutation to make sure that they're fair relative to the terms that are going to be offered in the subsequent exercises. So, for example, making sure that trivial commutation factors are fair relative to transfer values if the subsequent exercise is going to be transfer value based. In a similar way, trivial commutation exercises can also help with GMP reconciliation exercises, as it's not necessary to reconcile GMPs prior to making a trivial commutation payment. Right, now if we just go back to the survey and look at what the top reasons that you've identified are. Bear with me. Okay, so top reasons are, we have cost versus potential benefit at 41%, other priorities at 38%, and then other factors such as lack of capacity in the admin team, the cost, the code of practice, and the quality of data. So I think we are going to cover pretty much every one of those as we go through today's session. If not, then please feel free to submit questions as we go if you think your points haven't been adequately addressed. Okay. So, how do you go about designing a process that maximises the benefit to scheme members and ensures that members take the right option for their circumstances? So, there are a number of things to check in the rules, but I'll let Mark cover that in a moment. Most schemes will want to review their factors before embarking on a trivial commutation exercise. Many schemes, particularly smaller schemes, don't even have a set of trivial commutation factors. Those that do probably haven't reviewed them for some time, or they may only have factors that are intended for use at the point of retirement rather than for members who are actually in receipt of a pension. As I mentioned earlier, if you're using trivial commutation in conjunction with other liability management options, you may also want to consider the relationship between trivial commutation basis and the transfer value basis. And so let's just have a think for a minute about what a typical trivial commutation factor might look like. So I'll put this slide in to give you an idea of the sorts of payments we typically see. Now obviously it varies significantly from scheme to scheme. Generally speaking, trivial commutation factors are of a similar level to transfer value factors. Indeed, often they are identical. Both tend to be a bit less than the funding liability and significantly lower than the solvency or buyout liability. Many schemes are also now thinking about self-sufficiency as a liability measure, and although I've not shown that on this slide, self-sufficiency would be a little lower than the solvency liability, but above the typical ongoing funding liability for many schemes, for most schemes. Making a trivial commutation payment, therefore, tends to generate a small gain relative to the funding liability and a big gain relative to self-sufficiency or solvency. So returning to the design of trivial commutation exercise, another vital consideration in the design phase is to understand the quality of data. And many of the members eligible for trivial commutation will be members who left the scheme many years ago, and this tends to be the part of the scheme with the lowest quality of data, both in terms of the accuracy of the numbers, but also whether address details are up to date for deferred members. And many schemes actually phase their exercise to deal with this by dealing with pensioners first, where the data quality has to be good enough because you're paying pensions and you've got contact details for those members, while sorting out their deferred membership data at the same time. Designing the letters is absolutely critical to the eventual success of the exercise, and we'll come back to that in a bit more detail later. You should also consider who will be eligible for the exercise. Will it be all members or just pensioners? Will it be all eligible members or just single pot members? Will there be an upper age limit on the exercise? Now, there's no right or wrong answer to any of these questions. Each scheme will need to reach its own decisions based on its own circumstances. Finally, thought needs to be given to the process. Will it be compulsory, where members don't get a choice? Opt out, where the presumption is that payment will be made, or opt in? Now, practicalities mean that a compulsory exercise is only possible for pensioners under the single pot limit. Now, opt-out processes tend to have a higher rate of engagement and indeed take-up, but you probably want to set an age above which any exercise is opt-in so as to not unduly worry older members. And then will you run different processes for different tranches of members? And again, there's no one-size-fits-all solution. Each scheme needs to come up with its own approach based on its own circumstances. But what do we actually see in practice? Well, a significant majority, nearly 4/5 of exercises are opt-in. And the reason for that tends to be But when you're dealing with members who haven't yet retired or whose benefits are worth more than £10,000, then these have to be an opt-in exercise because you need to get information from the member, either bank account details to make the payment or retained benefits to make the check of total value of benefits. And because of this, many schemes actually decide to run the whole exercise as an opt-in process. Around 20% of exercises, though, do combine opt-out and opt-in, the opt-out part being for pensioners with benefits worth less than £10,000. And only around 4% of exercises in our experience include an element of compulsion. The next design question is whether exercises are split into tranches or run all at the same time. And around 60% of exercises are tranched in some way. And the two main reasons, accounting for about a third each, are to split the exercise between retired and non-retired members, and a similar proportion which splits exercises between single pot and total benefits members. The next two main reasons are data issues, which we've already touched on, so delaying part of the exercise in order to address data issues within that tranche of membership data, and running follow-up exercises, so as new members come into scope, then running a further exercise to pick up those members. Now, there are other factors. For very large schemes, they sometimes would tranche exercises just so that logistically there's capacity to cope. And sometimes there are scheme-specific factors that need to be worked through, a particular category of members or benefit structure that needs to further thought before the exercise can be embarked on for those members. And of course, some schemes do tranche exercises in multiple ways, so the categories on the slide are not mutually exclusive. I'm now going to hand over to Mark Baker at St Mason's to cover some of the legal aspects.
Okay, thanks, Mark. So I'll talk for a few minutes about the incentive exercises code of practice, which is an important area for trustees to understand before they embark on this kind of exercise. But before we do that, a couple of moments on the wording that you've got in your scheme's rules. As with anything that trustees do to do with the pension scheme, I guess before you embark on it, the first thing to do is to look at your scheme rules and understand whether they give you the power to do this kind of exercise. And of course, you get the standard problem that even on something relatively straightforward as this, one scheme's rules will never have the same wording as the next scheme's. So we've shown on the slide 4 examples of the kind of wording that you would be looking for in your scheme's rules if you want to run a trivial permutation exercise. If you've got the wording that's shown in one of these blue boxes, or something similar to that, then that probably gives you the power to do trivial commutation. Of course, it's essential that you take legal advice, but you probably will be okay if you've got wording like this. And you can see that there's a range of different wording. That the one in the top left-hand box is fairly specific and clear. The others less so, so you might need to look around in the document for those. There are some pension schemes where you'll have to amend the rules before you can do trivial commutation. In particular, if you've got rules that date back to before 2006, when the tax system changed, then the wording will need to be amended. And even if your rules have been updated since then, if the wording you've got doesn't quite match up with the examples we've given there, then you might need to make an amendment. But that is doable if you have to do it. On the left-hand side of the slide, we've shown the different variations that you might get from one set of rules to another. So in many cases, the rules will say that it's a matter of choice for the member whether they take trivial commutation. It's possible that your rules will give the trustees power to force people to take trivial commutation, so worth looking out for that distinction. And then also really important to be clear about which members the rules allow you to commute. So deferred members, well, yes, I guess they will do, because what you're saying there is that when a deferred member comes up to retirement, they can trivially commute at that point. But it's important to understand whether your rules give power to carry out trivial commutation for pensioners. And if they don't, then you'll need to make a rule amendment before you start on the exercise. And if you are going to amend your rules, is that okay? Is that a trustee-like thing to do? Well, in most cases, yes, it will be. If you're amending the rules in order to give members the option to take trivial commutation, then from a trustee point of view, normally that's fine. Why would you as trustees not be willing to do that? So normally that will be all right from a legal point of view. I guess it might give you pause for thought if you were thinking of making a rule amendment in order to give the trustees power to force somebody to take trivial commutation. is there a danger there that that might be something that could leave some members in a worse position than they would have been otherwise? Well, in most cases, you should be okay there. I feel fairly relaxed about that, as long as we think that trivial commutation is going to be neutral for the members financially, and what that comes down to is who sets the trivial commutation factors, as Mark mentioned earlier. And in most cases, it would be the trustees who have control of those. So it should be possible, it should be a trustee-like thing to do, to make that rule amendment if you need to, but really important that you take legal advice before doing it. So on to the next slide then, where we talk about the industry code on incentive exercises. And for trustees who are embarking on a trivial commutation exercise, it's really, really important to understand whether this code of practice applies or not. Many of you will be familiar with this then. This is a code that was adopted by an industry working group originally in 2012, and an updated version that has just been published a couple of months ago in January 2016. The code is really aimed at things like enhanced transfer value exercises and pension increase exercises, these things where, going back a few years, there was a concern that these exercises were being run in a way that didn't provide good value for scheme members and left them worse off. And that's why the code was drawn up, to give some guidelines and some parameters to protect against that kind of thing. The problem then is that in December 2014, about 3 days before Christmas, a statement was made on the working group's website which gave the impression that they thought that trivial commutation exercises could be caught by this code as well. And that's created a little bit of nervousness about whether, when you're running a trivial commutation exercise, you need to comply with the terms of the code. Now, most of the stuff in the code is fairly common sense, and in the middle of the slide we've given some examples of that. So communications have to be fair, clear, unbiased, and straightforward. Well, that's what you would expect. You have to allow members sufficient time to make a decision with no undue pressure. Well, again, normally you would expect to do that. But the one key thing under the code is that if you're doing something that is caught by the code, there is a requirement of some kind or other to give members access to financial guidance or advice before they make their decision. And it's that point which is the reason why it's essential for trustees to understand whether or not the code applies before they start a trivial commutation exercise. So the good news, as it says at the bottom of the slide, is that the new version of the code published in January makes it clearer that a business as usual trivial commutation exercise won't be caught by the code. So in other words, if you're writing out to your members saying, do you realize that you have the option to commute, and these are the terms, and you can either decide to do it now, or if you want to, you can come back at some point in the future and do it. If that's what you're doing, if that's the exercise that you're running, then that won't trigger the code. And so that means that you're not obliged to give members access to financial guidance before they make the decision. So that's a helpful clarification, and it means that most of the exercises that we're talking about won't trigger that requirement. On the next slide, there are a couple of pitfalls that you should look for. I think these are things that flagged up in the January document which has been published, which you should at least look at if you're looking at running this exercise, to make sure that you don't accidentally fall the right side of the line and accidentally trigger the code. So the first one, well, if you're giving people enhanced commutation terms, if you're offering them more money than they would get under the cost neutral factors, is there a danger that that might trigger the code applying? Well, I suppose, yes, there might be. It's not that likely that you would be doing that, because I think in most cases trivial commutation is done on cost neutral factors. But yes, that's one that's worth looking out for. The second bullet point there, I think, is the one that I would focus on the most, which is make sure that you're not giving people a time-limited offer. So this is the point, that you shouldn't be putting people under pressure to make a decision feeling that it's their one and only chance. And I have seen cases where that's done by accident. You can have an administrator sending out letters to people, giving them the chance to do trivial commutation and asking for a reply by a certain date, which sometimes is done as much for administrative convenience as anything else. I would say steer away from that. Make it clear to the members that this is not just a once-off offer, that they can come back in the future and request the same thing again if they want to. And if you do that, if you do it that way, then you'll stay the right side of the line and the code won't apply. And then the third point there's a rather confusing comment in the new version of the code, which implies that if you're giving people a particular level of access to guidance as part of the exercise, then that might trigger the code applying. Well, I think most of the exercises that we see running will be okay there. If what you're doing is giving people access to a helpline, I wouldn't see that as a problem. So those are the little practical things to look out for, but they are important implementation points. And to wrap up on this section, then the practical tips, making sure that you stay the right side of the line with the industry code. Well, the first point, really, really important one anyway, and this is something that whether or not the code applies, you will want to comply with this. Make your communications clear, and that's something that we'll come on to again in a few minutes, and Mark has mentioned already. Really important because it's easy to make communications more complicated than they need to be if you're not paying attention. The second one, as we've said, avoid giving a deadline. And the third one, which is, it won't necessarily be a strict requirement if the code doesn't apply, but it is still a good one to focus on. Decide whether or not to include elderly pensioners in the exercise. It will depend partly on the profile of your scheme. How many people do you have over a certain age, and is it worth including them? The cases where the code applies, the document talks about pensioners over the age of 80 and being particularly careful for them. And so I think that's a good rule of thumb, isn't it? If you have got lots of people in that group, then think especially carefully about how you communicate with them. Do you want to send them a full letter straight away, or do you want to give them a warm-up letter and then make the further details their option? There's no right or wrong answer, but it's important to think that through carefully with the circumstances of your scheme and the population that you're writing to. Okay, so that closes that section, and we'll now hand over to Sharon for comments on implementing your trivial commutation exercise.
Thanks, Mark. So far, we've explored why a scheme might want to run a trivial commutation exercise and some of the high-level aspects to designing an exercise. Now let's consider some of the more practical aspects involved with implementing an exercise. A typical trivial commutation exercise will involve several different parties, ranging from administration and payroll providers through to actuaries, legal advisors, and of course the trustees. The job of coordinating all these various parties will fall to the project lead, together with ensuring the project proceeds as planned and providing regular progress reports throughout the project. Some tasks will need to be carried out by the scheme's usual advisors, such as the initial provision of member data, whilst others could be carried out by one of several parties. As an example, the eligibility and lump sum calculations could be carried out by the scheme's usual administrators, its actuaries, or a third-party specialist. Issuing and processing all the member correspondence, together with the provision of any accompanying member support such as a helpline, is one area of a trivial commutation project where it can be beneficial to involve a specialist trivial commutation provider. This can help ensure members receive a high quality and dedicated service, whilst also easing any potential pressures on the existing administration team. There is, of course, one further key group of people involved in a project, that being the members themselves, but I'll come back to them later. If you hold on one moment, we have a... There we go. So, what might a typical project plan look like? The natural start point is to carry out a feasibility study to investigate the potential scale of the benefits to a scheme of running a trivial commutation project. Usually, a fairly high-level analysis carried out at minimal cost would be sufficient to determine this. A stop-go decision can then be made on whether to proceed further with the project. Assuming a decision is made to proceed, the more detailed work can then begin. Membership data can be extracted, and if necessary, advice can be given on updating the scheme's trivial commutation factors or making any necessary changes to the scheme rules. A trustee meeting will be required to decide some key design aspects of the project. For example, will it be run on an opt-in or opt-out basis? What categories of members should be included, and how long will the option period be? Once those details have been pinned down, work can begin on drafting the necessary suite of member communications. Likewise, the calculations can begin to determine which members will fall within the eligibility criteria and the amount of the lump sum that is to be offered to them. Whilst that work is being undertaken, there are also some operational details that we need to be finalised, such as when will payments be made, what format will the payroll team need the information required to make those payments, and how much time will they need to process that information. If a helpline is to be offered, then it's important to ensure any staff manning that helpline are fully trained on both trivial commutation in general and any characteristics specific to the scheme. Once all the pre-implementation work has been finalised, it's time to issue letters to members, answer their questions, process their responses, and ultimately make the lump sum payments. There will inevitably be some members that reply after the usual project start timescale is finished, so it's always worth putting plans in place for how these cases will be dealt with. Now let's return to the role members play in a project. When running an exercise of this kind, to ensure as successful an outcome as possible, it's important to design the member communications so that as many members as possible engage with the process right from the outset. To illustrate this point, let's consider a project with 1,000 members. If 90% of members respond and 80% of those members choose to take the lump sum, then 720 members will end up receiving the lump sum. If we instead consider the situation where the initial engagement rate is lower at 60%, but the proportion of members responding taking the lump sum remains unchanged at 80%, then only 480 members will end up receiving the lump sum. Capturing members' attention right from the start can therefore have a big impact on the success of a project. So, now we've seen how important it is to achieve a high level of member engagement from the very start of a project. How do we achieve that in practice? Perhaps the best place to start is by looking at what not to do. The pensions world is very complicated, and despite its name, trivial commutation is no different. A project may involve several different categories of member, each of which might be subject to different treatment or eligibility criteria. For example, lump sums paid to deferred members are taxed in a different way to those paid to pensioners or dependents. Likewise, some members may need to provide details of other pensions, whilst other members do not. Trying to cover all necessary information for all categories of member in one universal document would result in a very long document. If members have to wade through page after page of information to find and pick out the bits that are relevant to them, then there's a fair chance they'll just put the letter to one side and forget about it, or worse still, just file it straight in the bin. To capture members' attention, they need to be able to see instantly what a letter is about. Keep the letter as short as possible, use plain English, and ensure members can easily find and understand the key issues that need to be thought about when considering whether taking a trivial lump sum is the right decision for them. Some members will want further support, so ensure contact details are included. Experience has shown that something as simple as including an image of a telephone next to a helpline number will increase the volume of inquiries, compared to just including the number within the main text of the letter. Different categories of member require different information at different times. For some, the process may be quite simple. One letter may be sufficient to contain all the information they need to make their decision. For others, the process may be more complicated. This is particularly the case for the total benefits limit members, where further checks are required to determine eligibility. As a first step, it may be possible to simply ask them if they might be interested in trivial commutation and whether they have any other pensions elsewhere. The members' answer to those questions would decide the next step in the process. By breaking the trivial commutation process down into a series of small steps, it is possible to ensure members are given the information that is relevant to them at the time that they need it. To ensure an exercise is as successful as possible, it's advisable to offer members some form of further support. After all, if they have further questions but nowhere to ask them, then there's a reasonable chance that they simply won't proceed any further. This support could be in the form of a telephone helpline, perhaps also giving members the option to make their trivial commutation election over the phone. Offering a helpline email address is also worthwhile. In addition, a website could be made available containing further details about trivial commutation and giving members the option to request that someone from the helpline team calls them back. We actually find the number of visits to our website increases by around 40% shortly after a new project goes live. For some members, particularly deferreds where benefits aren't yet in payment, it may be necessary to carry out some additional identity and verification checks. Traditionally, this used to be done by asking members to send in documents such as a birth certificate or passport, but that can be unpopular. It's therefore worth making use of any of the electronic identity verification tools that are now available. At the end of the day, the key is to make the trivial commutation process simple for members, whilst providing them with the necessary information and support so they feel confident enough to make the decision that is right for them. Now let's look at the likely response from members. When planning a trivial commutation project, if a helpline is to be made available to the members, then it's important to appreciate the volume of calls likely to be received, as well as the type of questions likely to be asked by members. Considering the single pot category first, in our experience, around 25% of members can be expected to contact the helpline, with some of those members calling more than once. Overall, it's not unreasonable to plan to receive calls equal to around 35% of the number of members in scope. For members subject to the total benefits limit, the likely number of calls is much higher, at around 60% of the in-scope membership. This increase is largely due to queries around retained benefits and their impact on a member's ultimate eligibility for trivial commutation. Irrespective of the category, if members are able to confirm their option over the phone, then this is likely to prove to be a popular option. Typically, we see a spike in this type of call activity shortly after a project goes live, together with another spike just before the option period ends, usually because members have forgotten to send back their form and want to make sure they'll receive the lump sum. Tax queries are also another popular reason for members to call. In fact, when we first started running these projects, tax made up a significant proportion of the calls, so we've developed a specific flyer to include with our offer letters to try and ensure some of the most common tax questions are answered. There are a range of other reasons listed why members contact the helpline, but sometimes it can be something as simple as wanting a bit of reassurance that they are completing the forms correctly. If a scheme decides to run a trivial commutation project, then what sort of take-up rates might it experience? This graph shows the take-up rates for the project we've run so far. For each category, it shows the average take-up rate, together with the maximum and minimum rates experienced. Where the single pot rules apply, our experience shows that on average, around 65% of pensioners and deferred members could be expected to trivially commute their benefits. You'll see the spread of take-up rates is wider for pensioners, perhaps due to the increased range of ages that might be involved in a project. Our experience shows take-up rates tail off slightly at the older ages. As age increases, trivial commutation factors tend to decrease, so for the same eligibility limit, a higher pension can be commuted. This pension may therefore be a more significant proportion of the member's regular income, making commutation less likely. The average take-up rates for dependents are a little lower at around 48%. The average age of dependents tends to be higher than other pensioners, which, when combined with the higher £30,000 eligibility limit, can mean the pension given up is a little less trivial. Also, for the projects we've run, the majority of dependents are female. It's now common for women to build up their own pensions, but this wasn't always the case. Some of the current dependents may simply not have a pension of their own to provide an ongoing income. When it comes to members subject to the total benefits limit, the average take-up rates are lower at around 23 or 24%. The number of these members that are interested in trivially commuting their benefits is much higher than that and very similar to the single pot categories. However, once their other pensions are allowed for, a proportion of these members will then exceed the total benefits limit and simply no longer be eligible for trivial commutation. All these take-up rates, combined with the feedback we receive on the helpline, shows that members value trivial commutation as an option, and a significant proportion will decide it's the right route for them.
Okay, thanks. Now, in the light of the take-up rate experience that Sharon has just talked about, so we've turned briefly to the question of the financial benefit of trivial commutation exercises. So this slide shows how the financial benefit, which we're measuring here by the reduction in liabilities on either the funding or the solvency basis, plus the potential savings in admin, compares to the cost of running an exercise. And in particular, what's shown is how the ratio of the financial impact to the total cost varies with take-up rate. Now, as you'd expect, there are both fixed cost and the per member costs involved when running an exercise. And so knowing the sorts of take-up rates needed to break even, so in other words, when the financial benefit equals the cost, is therefore an important element within the business case for carrying out an exercise. Now, obviously, the details will vary from scheme to scheme, but to show you the typical sort of break-even points we see, I've shown here an illustration for a large scheme with about 30,000 members, which has a similar number of members eligible for both trivial commutation under the single pot and total benefits limits. And as you can see, the break-even point is reached with take-up rates for the whole exercise of around 10% or considerably less, actually, which are significantly less than the rates that Sharon has just discussed. And the sorts of take-up rates that actually you might expect across a whole exercise, well, the financial benefit at that sort of level of take-up rate is many, many times the cost of the exercise. There's also a similar picture for smaller and medium-sized schemes as well. Albeit that the take-up rate required to break even does increase, though still well below the actual rates we see. and the financial benefit as a multiple of cost reduces, but still remaining healthily positive for the range of actual take-ups that we see in practice. Now, I'll actually suggest that this sort of analysis should probably form part of your business case when you're actually considering a trivial commutation analysis exercise, though in practice, you'd probably want to look at different groups of members, so pensioners, deferreds, single pot members, total benefits, limit members, separately, because the conclusions may differ between different groups. I just had a question in, which is, does the graph exclude or include the costs of IFAs? We actually are assuming that IFAs will not be involved in the running of a trivial commutation exercise, and that member guidance and support would be provided, but not on an individual IFA basis. That is, in our experience, unnecessary and is not a normal part of a trivial commutation exercise. In fact, actually, if you include IFA costs within a trivial commutation exercise, it probably outweighs much of the financial savings you might generate. Now, Charles Goddard from Pan Trustees is now going to take you through a case study to give you the perspective of a trustee rather than an advisor.
Excellent. Cromaloy, or the CUK pension scheme as it's known, like most other defined benefit arrangements, is now closed to both new entrants and future accrual. It has in common with most schemes a significant deficit, which both the company and trustee ideally wish to take steps to reduce where possible, particularly prior to its forthcoming triennial valuation, which at the time of the exercise was due in April 2015. De-risking exercises were therefore very high on the agenda, and this would not necessarily be limited to only a triviality exercise, but at some point would also include the review of the scheme's current investment strategy. The long-term aim here being to move the scheme nearer to wind-up. This scheme in recent years had gone through many comprehensive changes, including administrator, trustee and principal employer, and company board members. Therefore, as a consequence, it was felt that the scheme needed a full review of all of its scheme documents together with the records held by the current administrator. The scheme has around 600 members, of which less than a third were now actually working with the company. Whilst clearly long-term costs for running the scheme will be a consideration, and the company was keen to reduce where possible, it was however agreed that as a first step, the trustees obtain a new, fully updated trust deed and rules, and this would encapsulate all the legislative changes and amendments over the years and encompass the new triviality options for both now and any new limits that may be introduced going forward, and also all future flexibility for freedoms. As previously advised by one of the other speakers, you do need to check that your rules do allow the new limits, and if not, a new rule amendment will be required. The other point to note is the Cromaloy scheme was a contracted out non-contributory scheme, and unless members took a transfer value, which few IFAs could recommend due to the scheme deficiency, there was in some cases a situation where members, if they died before retirement, would get nothing at all. With also the mounting issues surrounding liberation scams, the employer and trustees wanted to protect the members' interests without, however, placing further costs upon the employer in the next funding discussions. The trustees were keen to be seen to offer a full range of flexible options available to them, including the cash sum versus annual pension. In consultation with the employer and member representatives, it was identified that over a quarter of the current members, deferred and pensioners, could possibly qualify for a trivial commutation of up to £30,000. As part of good practice to meet the common and conditional data requirements, a full data cleanse was being undertaken by the administrators to ensure full and correct history for all the member records. In turn, the actuary was asked to look at both the transfer value basis and the commutation factors to ensure that fair value was being given. The commutation factors had in fact not been reviewed for some considerable time and were felt inappropriate and far too low for a modern scheme. The nearer the factors could be to normal retirement age and the transfer values to one another, then they would be far more acceptable to the members. With members now far more aware of freedoms, it had to be clear that in the literature that we were producing, that this was going to be an exchange, and it was essential that it was be treated as business as usual and not to be seen as a pure incentive exercise. It was therefore essential that the letters sent to the members were clear and unambiguous. They must not be too lengthy and kept simple. For those members who had any questions, a help desk was being provided by Xafinity. It was essential at all times in undertaking this exercise that we controlled costs. This exercise could then be taken into account when considering the 2015 valuation. In the long run, it would have the effect of lowering liabilities, reducing future administration costs. In some cases, it was costing more to administer the payment of the ongoing pension than the actual amount being paid. It would also lower the PPF risk and member levy. A project plan was drawn up with Xafinity to deal with the different categories of members who would benefit. This was effectively split into two phases. The first phase was for those pensioners currently in payment who would benefit from the less than £10,000 lump sum. It was agreed for all those under age 75 this would be compulsory, but for those over age 75 it was optional. The aim was to have all of these contacted and settled before the end of 2014, ideally a Christmas bonus. This exercise was completed on time and all members did take the cash sum offered. A separate timescale was then set for the second phase, where in all cases member consent or opt-in would be required. These were three groups: pensioners with a trivial lump sum between 10,000 and 30,000, deferred members over age 65 with a trivial lump sum commutation of less than 10,000, and deferred members over age 55 with a trivial lump sum commutation between 10,000 and 30,000. Again, communication had to be clear, explaining what they could be entitled to, but also what was needed, i.e. other scheme details, birth certificates, etc. And these documents would be required before settlement could be made. The aim was to have all decisions in before the end of February, so that if possible, settlement could be made before the end of the financial year. Although follow-up letters were issued, it was stressed that there was no pressure being applied to the members and the offer at all times would be open. The exercise itself resulted in 85% of the members actually responding with either a positive and providing further details or a definitive no. And of those, 60% of those members took the cash settlement, which was finally made in June 2015.
Right, thanks, Charles. So, in summary, a well-run trivial commutation exercise can potentially deliver significant financial and operational benefits, but careful thought does need to be given in the planning phase to make sure that the operation of the exercise is set up to best suit the needs of the scheme. Comprehensive member support can have a direct impact on exercise take-up rates, and in particular the quality of the communication that's issued to members is vital in making sure that member engagement is high. And experience suggests that the offer of trivial commutation is a choice that members value and appreciate. So before just moving on to the questions, I'll make a brief apology. I understand there were a few gremlins in the technology early on in the first 5 to 10 minutes of the presentation, and possibly a slide or two didn't actually appear on your screen, so apologies for that. But then moving on to the questions. First question we've been asked is, where is the voluntary code online? Well, it's actually at a website for incentiveexercises.org.uk, or you can find it by simply Googling Code of Practice for Incentive Exercises. Next question is one for Sharon, I think. So once undertaken, how often should an exercise be revisited? Every 3 years, perhaps?
Yeah, it's always worth redoing these exercises on a frequent basis. Members, as they age, will start meeting the age 55 eligibility criteria, and likewise some that might have been just over the limits, as they get older, then they might start dropping back below the eligibility limits. How often you carry out them probably depends on the size of the scheme. The smaller schemes, you might only have a few extra members coming in scope, so maybe every 3 or 5 years. For much larger schemes, it may even be worth doing them on an annual basis.
Okay, but of course members have the right to it.
Yes.
At any point anyway.
Option, so, yeah.
Great. Couple of link questions for Charles. Did any of the members in the compulsory commutation category complain that they didn't want to commute? And did you have any negative feedback at all?
No, we didn't. It was actually very well received. So the letters went out for Christmas, and I don't believe actually any individual made a comment at all on the helplines, whether it was down to the timing and the Christmas bonus one way or another, but yes, it went through very well.
Thank you. Okay, another question we've had in is about the operation of the £10,000 and £30,000 limits, and could you explain that again, please? Okay, so the payments that are made in both cases are made in accordance with the scheme's own commutation factors. But the way in which the eligibility is done is different. So for the £10,000 limit, the measurement is made, the assessment is made using the scheme's commutation factors. So the assessed value and the paid value is the same. But for the £30,000 limit, the measurement of value is done using standard factors, say 20 to 1 for deferreds, 25 to 1 for some pensioners, and for other pensioners a bit more complicated. But then paid using the scheme's own factors. So typically for the £30,000 limit, you might expect the payment to be a little higher than the assessment value, and in some cases significantly so. Question for Mark. For business as usual, is maintaining access to the same helpline necessary, or could it be a different helpline if the exercise is not carried out by the normal administrator?
Yeah, that's right. So you mean, is it okay to have one helpline for the first exercise and then access to the other, to normal administrators afterwards?
Absolutely.
Yeah, yes, that's absolutely fine, yes. It's fine to have a dedicated helpline. As you said, normally that's just a helpline, isn't it, and not providing any financial advice. The key thing is to make it clear to the members that if they do want to take the option later on, they'll still have somebody that they can speak to about it, and make it clear to them that there is no pressure on them to make a decision and no time deadline.
Great, thank you. Okay, another question for Sharon. Is there a minimum number of eligible members to make an exercise worthwhile?
Depends why you're carrying out the exercise. If it's purely for financial benefits, then there probably is a minimum number. The exact number will depend on the size of the scheme. 10 members is a big proportion for a 50-member scheme, but it's a tiny proportion for a 1,000-member scheme. Some of the costs of running these exercises are variable. Processing the forms that members send back, running the helplines, depends on the number of people you've got involved, whereas some costs, like drafting the suite of communications, are fixed irrespective of how many people you write to. So, yeah, for a very small project, those fixed costs will look more expensive. But if you're running a project because you want to actually make members aware of the options that are available to them, and that's something that's seen as valuable, then the costs may be minimal with respect to that.
Okay, thank you. Mark, another question here. What's your personal view on whether opt-in or opt-out is appropriate?
Yeah, well, I guess the first question is, what does it say in your scheme rules? Do you have power to force people, or do you just have to give them the choice? I think opt-in is more common. As you said earlier in the talk, there are some cases where you have to make it opt-in for deferred members because you'll need their bank details. And also, I think trustees will normally feel more comfortable with opt-in, at least for most of the membership. Experience is also that it normally gets a good level of take-up. And if you do an opt-in exercise, of course, you can always run a reminder, as we said, in the future.
Okay, thank you. We've been asked a question about whether we've encountered any reluctance from master trusts where fee structures are determined by member numbers. The simple answer there is that we've not actually run any exercises for master trusts. So we've had no reluctance, but that's because we haven't done it. Another couple of questions that perhaps I should answer. What percentage of a scheme's membership is on average eligible for trivial commutation exercise? This does vary significantly. One of my own clients with well over 2,000 members had 3 eligible members. Potentially as high as 25% though. I think, Charles, you mentioned in your particular case. I think normal would probably be somewhere in the 10 to 20% range. And then another question, is it worth doing compared to other de-risking initiatives? I think it's a different sort of consideration. So something like a flexible retirement option or an enhanced transfer value option are typically focused on making substantial savings relative to funding or some other liability measurement. Trivial commutation has a small positive benefit relative to funding and a relatively bigger but still relatively small saving relative to solvency. But it's a much more about making sure the scheme is being run efficiently, that the administration is done efficiently, and enabling other future exercises to be run efficiently. If savings relative to funding are your only objective, then trivial commutation may not be the right thing for you. But as a very good housekeeping step, it can be a very effective component of an overall de-risking strategy. As I mentioned earlier, we typically see 5 elements within a business case, all of which contribute to the benefit of trivial commutation. Another question in, for large schemes, is there scope to use medical underwriting data to tailor the trivial lump sums paid and to manage the selection risk? That's not something that any of us have any experience of doing, and it's not something that personally I would advocate. I think you're getting into some very difficult decisions there. The point about selection risk is an interesting one. If you have an open-ended option for people to commute a pension for a lump sum, is there a selection risk? Yes, theoretically there probably is. In practice, I think the risk is far, far lower. Members don't generally exercise an option at age 90 and above. They prefer to have the security of the income. So selection risk is something you might want to think about in the planning stage, but in practice it tends not to be a major issue. Sharon, a question about tax. Are there any tax consequences where payments from a scheme significantly exceed £30,000?
Trivial lump sums are taxed. Deferreds get a quarter of their lump sum tax-free, but then the remainder is taxed as income. Pensions and dependents, the whole lump sum is taxed as income. So it really depends on what other sources of income the member has and whether they've already exceeded the personal allowance. But yes, the lump sums are taxed in line with normal rates.
Great, thank you. And another question for you, sorry. Can you confirm how the limit is determined for dependents and spouses?
These dependents and spouses effectively fall under the single limit, where you don't need to test any other benefits they have, and it is effectively the limit is the amount of money they're going to receive. But the limit is higher, it's £30,000 rather than the £10,000 limit that applies for normal pensioners and deferreds.
Thank you. And another question in which you just give me a second is quite a long one. Okay. So the question says, for a secondary annuity lump sum on an FCA online tool may be launched, where annuity holders can enter their details and receive a range of estimates. Do you think this could have a follow-on impact to the valuation of trivial lump sums for pension schemes? That's a complicated question. I think my immediate response would be that the payments made from pension schemes have to be in accordance with the rules and have to be fair to all members. So payments made to members who are taking the trivial commutation lump sum has to be fair to those, but it also has to be fair to the members who are remaining in the scheme. You can't just pay out large lump sums and favour the people who are receiving the payments. So to the extent that secondary annuity markets might change the valuation of annuities, it might have some influence on trustee thinking of values, but beyond that I can't see it would have a massive impact on what trustees would generally consider to be fair value to be paid to members. I don't know if other members around the panel have got a different view.
It's still in consultation with the employer to agree what the factors are going to be.
Yeah.
So using that as guidance shouldn't dictate to the trustees what they're going to have to actually pay out.
I agree, yeah. Just because a third party puts a different value on a benefit doesn't change the trustee or the actuary's view of what fair value is. Okay. We are getting towards the end now, but I think there's still a couple more questions coming in. Bear with me a second. Yeah, okay, very important question. The police siren from earlier sounded like it stopped at your building. Is everything okay? I don't know yet. When I walk back into the office and find that there's nobody there, I will panic.
But the smoke's getting heavy.
Yeah. And a question for Sharon, I think. Do you need to get approval from dependents to commute the benefit as you are effectively commuting their benefit as well?
We have had projects where this was investigated, and the general rule that came back was no. And how would you gain the spouse's approval? We don't know if a member has a spouse. Even if we send them a form and ask the spouse to sign it, we have no way of knowing it really has been the spouse that has signed the form. So generally we don't for when pensioners commute their own benefits.
Mark, any?
Yeah, I think that's right, isn't it? It's the same debate that you have if you're giving people the chance to transfer out at retirement under the new flexibility regime. And I think if people have got bigger pots in a DB pension, then there might be an argument for saying that you should flag up that members should speak to their spouse. But I think particularly for trivial commutation, because they're smaller amounts of money, I think you're safe not doing. And that's consistent with the way that pension schemes have always operated in the past.
Any further questions coming in? No? Okay, thank you. So we have pretty much run out of time anyway. If there are any further questions that people think of, please don't hesitate to contact any of us directly. I'd like to finish by thanking my fellow panellists, Sharon Royston of Xafinity, Mark Baker of Pinsent Masons, and Charles Goddard of PAN Trustees. As I said at the beginning, we will put a link to the recording of today's event, including the sirens, and a copy of the slides on our website. We hope you found today's session useful and informative. We'd appreciate if you could complete the feedback form at the end of the event. We'll be offering further webinars later in the year, and if there are any topics that you would particularly like us to cover, then please email us and let us know. And that brings us to the end of today's session, and thank you for attending.